Have things changed? Yes, things have changed. In this video, I'm going to let you know what you can expect in today's market when you're selling a home and also when you're buying a home. If you like the information you get here, if you like the videos I have here, please subscribe, please engage, please ask me questions. I'm always here and happy to help, and I'm always happy to get questions from you and answer you as much as I possibly can. Okay, so in today's market, things have shifted, and it's important because things have shifted in a place that we kind of need to take a look at history. Now, one thing I've said before, and I'm going to say it again, is that 2008 is not really the history that we should look at because we're not in an environment that we were in 2008. It's actually really interesting, but before we get into that, as a seller, what you can expect in today's market is that you don't have the long lines of people. Typically, on some of the properties that I'm selling, sometimes we do get those long lines of people, and it depends on a couple of different factors involved in it. When we're looking at the properties and we're looking at selling the properties, we want to make sure that we're casting the largest net out, so to speak, to the largest amount of people that we possibly can. So casting the largest net means that we want to make the property most visually stimulating to as many people as we possibly can without breaking the bank. It's very important to do that, and to do that in different ways. And if you look at the property that I recently did over on 1295 East Main, 1295 East Main, we did a before and after video of that one. And we really did not do, I spoke with the sellers, I explained to the sellers that this house is a very charming house the way that it currently sits. It's not necessary to do a whole lot of work to it, because if we start doing a lot of work to it, this house was 100 years old. And this house was having that 100 years old, but it was 100 years old, but it was actually redone in the 50s. And so it's rare that you actually have a home that has that much charm and that much appeal, and it's been done in the 50s but has not been touched since that. Many times when somebody's looking to sell a home, it was built in the 50s or 60s, and in the 50s or 60s, then maybe it was revamped in the 80s or the 90s or early 2000s. And when you have a home like that, it's much easier to just do a couple things here and there. And with the property over on 1295 East Main, when you look at this video, you'll see that we really didn't do much to it. What we did was we did some basic things to it, like power washing the house. We didn't paint the house. We power washed the house. We did a couple of things that came up that weren't expected was a water main, fixing the water main. After 100 years, or maybe they had, when I spoke with the seller, they had revamped it. They weren't sure when, and so, but it was a long time ago, at least 40 years ago, they had revamped that water main. So that had to be done at the last minute. So overall, we really put minimal amount of work into it, keeping the cost very low. But we were able to get multiple people very interested in that home because we cast that net out wide enough to make that home appeal to a lot of people. Now, when we're talking about the current market and what a seller can expect, what a seller can expect is that it's different from what it was 7 or 8 months ago, even 6 months ago. It's different from then. There aren't buyers lined up to purchase a home the way that they were. One of the biggest reasons for this is because of the interest rates. Now, when we look at the interest rates, and in 2008 was really when the interest rates came down very far, and then again, they came down during the pandemic. Now, when we're looking at interest rates, when you look at the beginning of the 2000s, interest rates were somewhere in the 6s, 7s, and when you have the interest rates in that area, there are still going to be people who are interested. If you look back at 1980 and late 1981, that was when interest rates were really through the roof. It had taken the feds a long time, and I don't want to get into that because that's boring, but it had taken the feds a long time to actually raise the rates up that high. And the feds to take and raise the rates up that high at it actually got, the interest rates got to 18.45% in late 81. 18.45%. Now, a couple things on this. The average income was $22,000. The average home price was $82,000. So it was about 46% that somebody's paycheck would go towards their monthly mortgage. If you take that today, it's really what we're seeing now. And specifically, I'm going to specifically talk to Silicon Valley. Nationwide, nationwide, California average is about $78,000 income. Nationwide is less than that, I think around $56,000. Silicon Valley is $138,000. If we dive into Silicon Valley numbers, that's specifically what I want to target right now. And I want to explain something. When we look at the average of $138,000 income, that's going to go up and that's going to come down. And we always see that. Just like we have the average sales price in Silicon Valley, 1.7, 1.8 million, we have the people who are purchasing the $15 and $20 million homes. And so those are much different across the board. There are those people who can afford that, but we're looking at the average. So we're looking at the average of $138,000 in annual income. And when you take that $138,000 in annual income and you boil it all down, because that's what we're looking at, we're really looking for the numbers on this and the basics. If you want to get crazy on it, give me a call. But $138,000, we're going to look at the purchase price for the mortgage on 20% down. What you can afford on today's interest rate is for the mortgage about $1,020,000. So that's the mortgage itself, not counting the amount of money that you're putting down. So with that mortgage of $1,020,000, you're ultimately looking at an average purchase price to go into the 1.375, right around 1.25 to 1.375. Now again, when we're looking at the average, we're not talking about what we can expect across the board. What we're actually talking about is what we can kind of expect towards the moderate income of Silicon Valley. So 1.275, 1.375 in that realm. And so it's not anything that is completely overstretched from what we can expect from where we were before. Again, if we go back to what the seller can expect, that's why we don't have this huge line of buyers, because not every buyer is in a position to put down the money and to afford the monthly payment. Now, when we look at history, we can talk back and forth about how history has shown us and how things continue to move one way or the other. But what I always tell people and what I always come back to is that when it's time to buy, it's time to buy. When it's time to sell, it's time to sell. So as a seller in this market, I always urge the sellers that I'm working with, let's look at what's happening right now, because we don't know what's going to happen tomorrow. We don't know what's going to happen next year. As of right now, it looks like the Feds are talking about raising interest rates again. How much is that going to affect us all together? Well, I can tell you this. As a seller, it will affect you probably short term. As a buyer, it will probably affect you short term as well. But I'll also tell you this, as a buyer, now's a great time to get in, because when it does affect you in that short term as a buyer, if you can afford it now, and then in a year and a half, 2 years from now, when every other buyer in Silicon Valley is looking to purchase a home, just like they were in 2001 and 2002 up to 2006, and then again in 2010 through 2015, 2017, 18, and then 2019, a little bit of a pause, 2020 in May, lines of people. Even though we didn't have open houses in the May of 2020, there was lines of people, and that's when the housing boom started again. And so we never know what's going to happen, and I don't anticipate another pandemic. Please, God, no. That's not what I'm saying. What I am saying is that history is going to repeat itself. Silicon Valley, homes here tend to do very well. The stock market, as we all know, is not doing great right now. If you have a house and you're looking to sell it, if it's the time to sell, then it's the time to sell. And don't, if you have equity in it, it's not equity to you unless you sell it. So if you need to sell, then now's a good time to sell. And if you want to sell, now's a good time to sell. We'll find you the right buyer. And if you want to buy, now's a great time to buy, because you can always refinance the mortgage later on. And typically people are not going to sell, not going to hold on to their home for longer than 7 years. So typically people are selling every 7 years, or they're refinancing every 7 years. And if you purchase in a high interest rate, you can always refinance that later. You can also look at an adjustable rate mortgage. Adjustable rate mortgages are great because they give you a lower interest rate up front, and then eventually you can refinance. And again, overall, not expecting a 2008. Nobody's talking about a 2008. I think what we can really look at and reflect is the 80s. I think right now it seems to me that we're kind of in that 81 mark right now. We're on the higher end of the interest rates. This is the time that people start to move. The stock market's, Warren Buffett said, when there's blood in the street, that's when it's time to buy. I think that this, it seems to me that the blood in the street is there. And I think ultimately buying, selling, if you're in the market to sell, if you're in the market to buy, this is the time to do it. I'm always happy to talk about this, and I would love to get deeper on it with you as well. Always feel free to give me a call anytime. Phone number is 408-393-9294. If you need anything at all, please feel free to reach out. Take care.